Tiger Brands is a basic foods and a branded goods group with operations across Africa. It is currently in negotiations to buy a controlling interest in Dangote flour mills in Nigeria. It has a market cap of 51 million rand, a price to earnings ratio of nearly 16 and a dividend yield of 3%. So Tiger Brands' main focus right now is in partnership with the Dangote flour mills. Your thoughts on Tiger Brands and what they are doing in Nigeria?
I don't like what they're doing in Nigeria. The problem with the Dangote deal is we don't know what they're paying for that. And they do have they have overpaid for some previous acquisitions, and they're still sort of suffering the consequences of that. So the market is still very suspicious on what that acquisition, the price of it, and whether that will really be earnings accretive. And yeah, I don't know. I'm still sort of on the fence on Tiger Brands. I think they still have pressure in the South African market, and I don't quite buy into their African strategy just yet.
Well, Paul, we also had Daniel a few weeks ago talking on Tiger Brands, also worried about Tiger Brands paying too much for some of these acquisitions that they're doing. Are you as worried as they are?
Well, you know, I mean, today's bargain looks like tomorrow's bad deal and vice versa. You can't really tell. I mean, obviously you've got to do your due diligence and hope you don't buy a dog. But as far as it goes, they want to get real presence in these countries. So they don't just want to be shipping stuff in on the back of a truck or floating it in a container and finding a retailer to sell it for them. They actually want to be involved with production because they've discovered, I think, that locally based companies often have better distribution relationships, blah, blah, blah. So they've already done quite a lot in East Africa. They've done quite a lot in Central Africa, in Zambia and Malawi and so on. They've been up the other side, and now, you know, Nigeria awaits. So Dangote is like the, you know, Oppenheimer of Nigeria, right? He's got a funny empire of stakes, and the central company lends money to all the operations, and it's quite hard to determine what the real profitability is of the different parts. And I think that's what we're alluding to here, is there's a concern you might buy Dangote flour mills or take a 64% stake and then discover that you've bought the part that doesn't have the profits because there's some or other funding relationship. So I think that conversation is ongoing. Remember, the FD of Tiger is from Nigeria. She knows that world, Funke Ingodara, and I think she's not likely to have the wool pulled over her eyes in terms of that.
So your thoughts, do you think that they should rather be focusing on the South African operations and not too much on these acquisitions that they're doing right now?
You see, my view is that South African companies sometimes are a bit arrogant when they go into Africa. They think that they can just go and do exactly what they're doing in South Africa, go and do it in Africa and it will work. A lot of companies have burnt their fingers doing that. I like the strategy of Mr. Price and ShopRite, where you go and open perhaps one store, get your distribution correct, get your procurement correct, and then when you have all of those pieces in place, then you start with the expansion. I'm very uncomfortable when a company goes and throws millions or billions of rands and just to go and buy into a company and they don't really know whether they can operate it yet.
So uncomfortable. Are you buying?
No, I'm not buying.
Look, the share price has been wobbling around there, as you can see, because people are worried that there's been this rising price of maize and price of wheat because of droughts in the northern hemisphere, and that basically that means that, you know, a lot of Tiger Brands is still about half basic foodstuffs, you know, breads, maize, wheat meal and so on. So the concern there is if your input price rises but your customers, you know, are battling, you won't be able to recover that. So I think that's where it's been sort of wobbling around. But at the same time, 50 billion rand market cap makes it big enough now for it to attract global investor interest as a one-stop entry point for Africa. It's got good corporate governance, it's got a good track record. So people have been acquiring it, and the foreign ownership in its shareholder base has been rising. And it's on a 16 price to earnings ratio compared to some of the retailers, which are at 30s. So I just think even though it probably is going to have some issues, it's probably still relatively cheap compared to where it can go in the years ahead.
So hot.
I'm happy to give it the hot.
So hot
yes,
on this one, Stefan?
Not for me.
So one hot and one not for Tiger Brands.